Good evening. This is the video newsletter for buysellshort.com for Tuesday, September 16th. Wow, nice to be able to take a deep breath. What a crazy market. I will go back and say I didn't exactly call what's happening, but I said we were going to be in for some serious pain in the market in September and October, and so far I've been dead on. Granted, how things have played out, not exactly what I thought they would be, but still, it just pays to be high cash going into this time of year every single year. If it's not one thing, it's another. Right now, what you're seeing is just a financial tsunami, one that blows through the market every 5 to 10 years, and people are just getting destroyed right now. I mean, just this week in the last couple of days, we've seen Lehman Brothers and Merrill Lynch go bye bye. Here we have the Dow 15-minute chart. I've redrawn it. We've got a very large bullish falling wedge in place, but not exactly a bullish thing. This kind of formation usually sees extended downsides. It's a mirror of pretty much what happened back in 2001. Uh, Bounced back up, and now we're working our way towards a new bottom, likely in the 10,200 to 10,500, barring any extraordinary news. Volumes just through the roof over the last couple of days. If we flip over to the NASDAQ bullish percent index, we're a long, long way from being in oversold territory for us to consider buying. We're at 36. Buy zone is the 20s. A lot of room to go. And as you remember, back in August, I said, be careful. This index told us a crap storm was coming, and a crap storm we have right now. Not very many picks right now. As I mentioned in the room, high cash is the way to be. Even extremely fast traders with very fast trading platforms are finding it hard to grab some of these moves. I mean, right now I'm looking at AIG and after hours, and the stock just went from $1.85 to 220 to $1.80 to $3 in the space of 20 seconds, and now it's gone from 308 about 45 seconds ago. It's back down to 212. Just insane, rumor driven market. We're awaiting. I guess there's a game of brinksmanship going on right now. AIG has hired the same bankruptcy lawyers that Lehman hired, so they're trying to get the Fed to extend them loans. Hopefully the Fed does, because if AIG goes up, no knowing what kind of crap we're going to see in the market over the next couple of days. Stocks are breaking down left and right, then they're bouncing, look ready to be bought. You buy them and then they break down again. Not a market that trading alerts can be sent out, or a market where I can say, let's buy XYZ at this price, because things can change in an instance right now in this market. We stay high cash. We wait for a bottom to confirm, and it will confirm. We usually tag every single bottom that comes along and then make out big. So, no use being brave in this market. As the analogy goes, this is not a knife catcher market. You stick your hand out to catch the knife, it's going to chop off your fingers. So, keep your hands in your pockets right now. This crap storm will pass. They always do, and there will be great buying opportunities out there. Right now, this is an absolute gambler's market. People who say they're banking in this market are not trading off charts. They're just buying and hoping, or shorting and hoping. Makes perfect sense to short AIG at 4, but news could come out and it could be $6, 12 seconds later. And then you cover and it could be back down to $2 15 seconds after that. Today we had AIG open at a buck 25, then rally all the way up to 524 when CNBC reported a rumor of a Fed liquid, giving them a loan. Then after the market had rallied big, same CNBC clown came on and bashed his news. So, everyone has an agenda right now. Market was down 100 and we rallied 200 points in the space of 20 seconds late in the day. It's fantastic volatility if everything's moves, but actually, just looking at AIG right now, it just went from 212 to 280. Unbelievable volatility. This will continue, but I'd rather us wait and see versus throwing out plays and saying jump in and hope for the best. If you need to trade SMH, if this rally is legit, the SMH should lead. So I would keep an eye on the SMH. It's starting to have pretty large intraday moves. Looks like if we have tanks, ads in the 24 for 50-cent scalps should be good. So if you're looking for something to trade, SMH, the XLF is the financial sector spider, but it's not lots of volume, but not the kind of volatility we'd like to see intraday. So probably not one we'd look at. You could try and trade, the financials, but like I said, just you're risking your money. The risk reward sucks. You could make 100% on your money or lose it all in the space of 2 seconds based on rumors. Let's just sit on our hands right now, guys. We've been high cash going into this crap storm. We're going to stay high cash, and you could be like 90% of traders out there are just getting their asses handed to them. So be grateful we are sitting here waiting for the turn, and it will come. Looks like CNBC is now reporting that their Fed is likely to give an $80 to $90 billion bridge loan to AIG. So if we get that news, we could see a nice relief rally tomorrow, and then we'll be sending out plenty of alerts. But until then, let's just wait and see. That's pretty much the newsletter for tonight. I'm sorry no plays, guys, but it's really tough to call plays with a market like this that can change overnight. We could be looking at a 100-point drop on the open tomorrow or a 150-point rally. So, we've got our usual suspects we'll keep an eye on, and we'll play it by ear. If it does look like a turn is in place, we will get some stocks. That's it for the video. Don't panic, guys. Just sit on your hands, and the storm will pass, and we'll be back to normal again. See you guys in the chat room tomorrow. Good night.